Well, let's move on to I always wonder about the credit card company. So we thought we'd take a look at Visa because Visa is, I believe they're bigger than MasterCard. I think they're the
I think
biggest.
so.
Yeah. So, but we're going to take a look at Visa. Their symbol is V, as in Visa. They're in the credit service industry. Short on the flow is only 1.3%, 91% institutional owned. We do see a PE ratio of 31.1. That isn't even above the industry at 26.1. Price of sales 17.5. Wow, 4.8 for the industry. We do see price to book value 16.7 versus 4.8. Price of cash flow 29.6 versus 14.7. I'm just gonna say, like, wow, Visa really trades at very lofty valuations. The PEG ratio does look good though, 2 versus 4.5. Now we do so the last year, their earnings did climb by 7.4%. The industry is only up 4.6. The sales for Visa climbed by 12.5%, industry up 12.7%. And the analysts do give it a 5-year earnings per share growth rate of 12.7%. That's slightly under the industry at 13.9%. Now, they do pay a 0.8% dividend, using 23% of their earnings to pay that out. Taking a look at the balance sheet, you got a current ratio of 1.1. That's below the industry at 1.8, so you'd like to have that higher because it gives you more liquidity. Debt to equity looks good, 0.6 versus 1.5. Net profit margin, wow, 50.2 versus 19.4. And I think that's just because they keep collecting those fees and don't have many expenses to do that, which could be what kills them going forward. Return on equity, 53.1 versus 42.7. Free cash flow, 23 billion, above the industry at 17.2 billion. Chase, what do you got?
Yeah, so current price here for Visa, $331.58. The 52-week range here, the low $299 and the high $375.51. To answer your question, MasterCard's market cap around $500 billion, Visa's market cap $627 billion, so they are the largest. Year to date, though, the stock is down about 5.5%. Now, going forward, I mean, you kind of already hit on the valuation, so I'm not really surprised to see this number.
Weren't you going to talk on the 5-year return on that?
I was going to come back to that.
Okay, you come back. You keep going.
But the current estimate for earnings per share out to September 2027, it's $14.54. I mean, it gives us a target sell price of $241.36. Still trades around 22, 23 times those future earnings. So it's still expensive. And kind of looking at the returns here, over the last year, Visa is down about 5%. And over the last 5 years, you've done okay on it. Don't get me wrong, right? You're up about 60%. That's pretty good. But the last 10 years, you're up 371%. So most of that 10-year return came within the first 5 years rather than the last 5 years. And I do worry over the next 5 years, you might not see much growth from here either.
And I do worry because now you go to restaurants and, we're going to charge a merchant fee. Well, restaurants, not so much. I think restaurants don't want to do that, but some do, but others don't. Or sometimes, like we're doing something in our backyard, it's a large project with a paving company. No, we don't take credit cards, either Venmo or write a check. I think more people are getting away from using credit cards because either one, they're paid for the fee, the consumer's paying for it, or number two, the company doesn't want to pick it up. So I see the trend of credit cards, unfortunately, declining, which is going to, I think, hurt Visa and MasterCard.
Yeah, I mean, less swipes, less profits.
Yeah. Gosh, I can't quit that closing bell.